Hello everyone, and welcome to this month's episode. This month we're going to be talking a little bit more about mortgages and what to do if you're in a variable mortgage and a little something called a trigger rate. So first and foremost, a lot of people have obviously been expressing their concerns with where interest rates have been rising. If you are someone who purchased over the last couple of years and you locked in at a very low rate, likely right now your rate is somewhere more between 4.5 and 5%, depending on the variable rate that you locked in at the time. A lot of times when you are locking in at a lower rate, the bank will have what's called a trigger rate, which is basically when your principal and interest start to become evenly matched, and then eventually when your interest actually exceeds your principal payment. When this happens, the bank reaches out to you and asks you whether or not you want to enter into a fixed mortgage, which actually is not at the rate that you're locked in at. It's the bank's posted rate, or if you want to continue to make your payments. The problem with the trigger rate is that not only are you now paying more interest than you are paying principal, but your actual amount that you pay each month is going to rise. So for some people, this is an unfortunate fact, especially if you're an end user and you don't have any rental income to actually help with those payments. So there's kind of a couple options that you can do if you're in this situation. The first is, of course, like I said, locking into a fixed rate. This isn't the greatest idea right now just because of the fact that rates are so high, but for some people, it does take away a lot of the anxiety. Second thing you can do if you've got some income set aside is actually to pay down a bit of your mortgage. So depends on your terms of your mortgage, of course, but a lot of banks will actually allow you to pay down $10,000, $20,000 of your mortgage just to help with those payments. And then what can actually happen from there is your payment amount will stay at the amount that it's at and not continue to increase should interest rates go up. So we can't really anticipate what's going to happen. We do think that going into 2023, interest rates will start coming down again. But it's really important right now, if you are getting close to your trigger rate or you've actually already gone above it, that you get in touch with your mortgage broker or mortgage specialist to figure out what the best course of action is for you going from now on. Anyway, I hope this was helpful. If you have any questions about anything I just talked about, of course, always feel free to email me at ashley@aspgroup.ca. Thanks, guys, and have a good one.